Bank. We do like some of the PSU banks like SBI, Bob. But as a sector, we think that it will be a slow-moving sector.
Okay, Hemang, hi, morning. What is it that you're making of this charged vigor across the financial space in particular? I mean, PFC, REC, all of them are, suddenly all charged up again.
Yeah, so you do see those bouts of momentum in these pockets as they continue to remain quite attractive in terms of valuations on dividend yield parameters. Also, at times you do see certain flows in when there is a rejig in the indices. So we do like PFC in particular, which has kind of delivered a very healthy set of numbers over the last 3 to 4 quarters, available at a subpar kind of price to book about 1.2, 1.1, dividend yield 4.5%. So yes, I do think that there is some juice left, in terms of upside of about 18 to 20%.
Maybe we can get in your thoughts as well as to how you're looking at that entire space, the retail, the restaurant players. They're talking about how demand unlocking could create value creation. Are there any stocks that you track within this space that you'd be bullish on?
Yeah, so when we look at this entire discretionary consumption space, you have on the one hand, retailers like Trent, ABFRL, and a few more. And on the food side of it, you have Jubilant Foodwork and Restaurant Brands of India and Devyani International, etc. So our understanding is that when it comes to the retail formats, Trent though has run up so much and is at about 80, 85 times the forward price to earnings, partly because of the inclusion in the Sensex and partly because of the way the company is delivering. There is a certain amount of interest, and we do think that it would make sense to buy Trent, even if it corrects, add that. Also, in terms of the food companies, I think Jubilant Foodworks delivered a relatively better set of numbers, and the growth outlook is better. While this entire space is not so easy, and we haven't really seen any major, numbers or data points suggest that the demand is coming back. I think Jubilant Foodwork is something that we like given the better set of numbers.
Okay, Jubilant Foodworks, that's definitely on the watch list. In the meantime, let's also talk about, what else is happening in the markets. While yesterday, of course, it turned out to be a bit of a lackluster session. We gave up all of our morning gains, but a couple of these insurance plays as well bounced back very nicely. Of course, there are all concerns with regards to autos, Hemang, as to, whether those discounts were really to do away with inventory or was there a demand slump. Of course, auto companies have come out and said that it's the latter. We just wanted to understand, autos after the run-up that they've already seen, what is it that you're making of this space? Because a lot of transition there to Bajaj Auto now getting into the CNG bikes. They've set a big milestone for themselves as well as to how much they're going to clock in terms of sales. Maruti post its AGM talked about what the EV pipeline is going to look like and how many new product launches as well that they have. Wanted to understand where within autos are you comfortable to put fresh money to work or add on to positions right now?
So, Aisha, there are two or three takeaways in this entire auto space. One is that the two-wheeler as a space is doing way better than the PV or CV when you look at last, let's say, 1 year or so. And given the pipeline, given the fact that you had an Ola IPO which met with a lot of success, we do think that some of the existing incumbent players like Bajaj and TVS and to some extent Hero are better placed because of the way the demand is shaping up, and even these companies have their plans on the EV side of it. As far as PV is concerned, I think the growth has not been that great. There were, indications of inventory pile up. But as we move into the festive season, people would really want to see how the growth is looking like. Also, this scrappage policy, see, we've been talking about this for last 15, 20 years. On the face of it, it looks like it could be, a little bit of positive trigger. but I'm not too gung-ho on that, trigger itself. I think the market would really want to see the real growth numbers in the festive season. But within the pack, I think Maruti, given its positioning in the SUV and particularly hybrid products pipeline that they have, I think is better placed.
All right, thanks for that. Stay on with us, Hemang. Let's put the spotlight on the discussion, and it's interesting, given the number of players that are actually hoping to get a bite out of the quick commerce space. There's Flipkart that has entered, Amazon, according to ET sources, Big Basket has said that they're going to pivot here, and of course, Swiggy and Instamart already, Swiggy and Zomato already have penetration here. Just curious to understand your thoughts as to what you think this means for the big players.
So yes, the sector is showing a lot of growth, and you see many more marquee names. Either they already have an offering or they are trying to move into it. Be it Big Basket and clutch of other players. So the way we look at this is that while the competition may intensify, given the overall size of the opportunity, you will see a lot of interest, and particularly whenever Swiggy launches the IPO, the excitement will only increase. So I think Zomato is something that we've been liking. I think food delivery business, they're doing pretty well, and on the Blinkit, the growth is outstanding. So the stock has done pretty well, but I think even at this price point, it offers a good return potential of about 20-22% from a 12-month perspective.
Okay. Hemang, what is your view on Reliance ahead of AGM? Is there something coming from AGM?
Nikunj, every time Reliance has an AGM, people start having a lot of expectations, and more so this time around because I think 5 years back, Mr. Mukesh Ambani did mention that he will lay down the roadmap for the IPO of the retail and the Geo. And as we see the companies, stabilizing, they have achieved a certain scale. There are expectations. I honestly don't know whether actually you will see the announcement or no, but on a standalone basis, irrespective of this AGM height, when you look at the company, I looked at the annual report of the company, and what stood out for me is that the capex in the retail side has gone down by 50%, and the peak of the capex when it comes to Geo is behind them. So you'll see a decent amount of earning visibility with a good margin for these two businesses. O2C business, not very clear about how the growth will look like, but it should give you a steady state of return. So I think from a risk reward perspective, the stock does look attractive.
Okay. Is there trade there in Reliance side of AGM, Naresh?
So the traders on the long side, the stock looks interesting. It's not caught up with the whole market as such. So from here on, it can be a slow and steady move, and there is a positivity from the AGM as well. Because we've not seen anything, it's a decent enough bet. So if you look at the stock price at say 3,000 odd levels, it is where it was back in March as well. The previous high is around 3,200, so that's the upside. The recent lows are at 2,900, so you have a 100-pointer downside risk, or even a 50-pointer downside stop loss, and a possible 200-pointer upside. So the risk reward is there, although the trend is not great.
Anything interesting, Hemang, in pharmaceuticals, which looks like a buy right now?
I think the space has done pretty well this earnings season. When I look at the numbers, that was, I think, second in terms of the overall growth, and that is the kind of, growth that we are seeing after a long time. So I do think that, be it the large cap generic focused companies like Sun, Dr. Reddy, Cipla, or some of the, API based companies, whether it's Laurus Lab, Newland Lab, Glenmark. I think these companies, are sounding far more confident about their growth, both in the US market in terms of their specialty products or domestic market. So I would certainly be very comfortable having, some exposure to the names like Sun or Dr. Reddy, even at this point of time.
Okay, fair enough. That's the view coming in. In the meantime, let's also get in your thoughts, Hemang, as to what the outlook is when it comes to some of these MNC stocks as well. There has been a little bit of traction that has picked up. the valuations, continue to as well remain rather compelling. For example, for ABB at a P of about 80 times for FY26, Nestle 62. What's your outlook on how one should be looking at some of these MNC stocks in light of the valuations that they command?
One, see, valuation is something that will remain elevated for the pockets. Either they are showing very high growth, like cap good space, be it ABB, Siemens, Cummins, so on and so forth, or some of the consumer facing companies like Nestle or PNG and so on and so forth. So I don't think we need to focus too much upon that. I think as long as the companies are delivering very healthy growth, let's say in case of ABB, Siemens, and Cummins, when you look at their numbers, they really surprised the market. Their margins were slightly better, also because of the kind of capital, capex cycle that we are seeing. The growth looks quite good. So I'm not too much worried about that. I would be more comfortable buying into a Cummins or a Siemens at this point of time also, while I would avoid the consumer stocks because, there is no real excitement in terms of growth over there.
Okay, stay with us, Hemang. These pharma stocks, we've been talking about this quite relentlessly, and just yesterday the pharma index hit.
If you like this video, then like, share and subscribe to ET Now.